Welcome back to the Discovering Commercial Real Estate podcast. Our guest today is an absolute legend in the real estate industry, the principal and head of tri-state investment sales at Avison Young, James Nelson. James, it's a pleasure having you on today. Thank you again for doing this.
Thank you, of course, John. Thank you for having me. I love what you're doing with the show. I'm a big fan, so Awesome. It's a real pleasure to be here today.
Thank you. And before we talk business, can you tell the audience a little bit about yourself? So where did you grow up and why did you get into this industry?
Sure. So, actually born in Burlington, Vermont, then grew up in Madison, Wisconsin. I don't know if you want the whole story. And then my father was transferred to the Washington Hospital Center, so I was in Bethesda, Maryland, for at least 10, 15 years. Went to Colgate, class of '98, upstate New York, and that's where, thankfully, I found out about Massey Knackle, and that I started in the business in 1998.
Awesome, man! You started the business right out of college, directly into commercial real estate.
Yes,
awesome.
Which was very lucky because I was telling my oldest son yesterday. He's already trying to figure out what he wants to do. Right. He says he wants to get into real estate. I said, Luke, I didn't even know real estate was a thing my senior year in college. You got plenty of time to figure it out. Yeah,
for sure. And what do you think you'd be doing career-wise if not commercial real estate?
You know, my senior spring, I thought I was going to go out to the West Coast and make movies or write scripts. Okay. I love doing improv, and I love writing scripts. And so until it became very clear that you basically go out there and you try to find freelance work, and it would be very challenging. When I started out, I was in debt. I didn't have any money to my name, and so going out without a paying job was not going to be in the cards. So, fortunately, I ended up in New York and haven't quit the day job yet.
Awesome, great. And I want to understand where you first developed your sense of business. So, if you had to think back to the first time you remember selling something, what kind of comes to mind?
Well, that one's easy because it was really my grandfather who's been a huge inspiration for me. And he started out and he had 3 kids by the time he was 21 years old, wow. Which blows my mind because at 21 years old, I could barely,
take care
for myself, right? And but he had to figure out a way to make it work. So he walked on to a car lot and he said, can I get a job here? And kind of started in service and ended up getting a job selling cars. Fast forward decades later, he was one of the most successful auto dealers in the South. Awesome. He had a board seat at GM.
Wow.
And I always asked him, what's the key to your success? He said tenacity, wow. that stick-to-itiveness, not giving up. So hopefully I have a little of that rubbed off on me.
100%. And so you studied English at Colgate University. Can you walk us through how that kind of helped you in your career today? How did you use the tool of language to propel your career forward?
Wow, you did your homework. Thank you. It is so amazing how much we use the spoken language and the written language every day, and so much of what we do, and I think the way we communicate, certainly with the thousands and thousands of emails that you compose, right. But I think it's been very helpful throughout my career, just being able to communicate, hopefully a direct style, right. And being able to
articulate
your points clearly. And it's stayed with me. Awesome. So, and I think also the liberal arts education, just to get an experience. And Colgate, I wasn't, again, they didn't even have a business major, but right. To be able to spend time on the swim team, be in a fraternity, take a bunch of great classes, and you had a really great, well-rounded experience doing that.
Awesome, perfect. And you worked at Massey Knackle from 1998 to 2014. How did the company change from when you started to when it was acquired by Cushman & Wakefield? And how did this experience prepare you to be a principal and a leader in your business today?
Right. So when I started, which was in 1998, 10 years after Bob and Paul had founded right. the company. I know you've already had Bob here. Yeah. I think, have you had Paul on yet?
Not yet.
You got to have Paul on. Soon. Yeah, you get them both. You'll get the full story. But when I came, and they had established a niche, and brilliant. The fact they said, we're going to focus on small to mid-sized buildings. We're going to do in a territory system. We're going to do exclusive seller rep. So they already had a lot of momentum. And that being said, when I joined, there was probably only about 20 people at the company. We were only handling south of 96th Street. If someone wanted to buy uptown or in the boroughs, we said, good luck. We don't even know, how to tell you, where to go or who to work with. And so very early on after I joined, we opened up an office in Queens that Tom Donovan opened up shortly thereafter, Brooklyn. And I think a lot of the early growth with Massey Knackle was in the boroughs because you had all these global brokerage firms who were all focused on Manhattan, all focused on the trophy assets. And we saw this huge part of the market, the majority of the market, 95% of the properties which sell here are under $50 million. And it was the wild, wild west back then. Right. So, I mean, it was really brilliant to come up with the territory system and how to go after it. But I mean, the boroughs, it was just the amount of business that we did out there was just exceptional. We'd sell 400 properties a year and 300 of those would be in the boroughs. Wow. So that really allowed us to grow. So by the time we sold the company, which is now, call it about 8 years ago, we had 4 offices, 250 people. Right. So it was so much fun being a part of the, that business and being able to help it grow.
That's so awesome. That's great. And what have you learned about yourself since you've closed your first deal at Massey Knackle?
Well, I've certainly learned that I love this business. I have a passion for it. I know Bob spoke about that when he came on here. I mean, this is a business where you spend a lot of time. So if this is work for you, then you're in the wrong career. But no, I just every day it's something new. I'm meeting someone interesting. I'm learning something new about the city or a certain kind of business. And there's also, I think, the first 5 years in the business trying to figure out sales and brokerage. And I had very early on, had an associate or two. In fact, some very successful brokers today, Brock Emmetsberger, Clint Olson. But, from there, I ended up building out a team. And if you really want to be successful and do this business and do volume, you have to have a great team. So I love every single day thinking about, how do we optimize? How can I be a better leader? I'm very lucky to have Erica Dean, who heads up the operations of our group. You got to hear from him. I mean, he's incredibly inspiring. And so I love that every single day you can try to do something to just become that much better. Awesome. And, the market's also constantly changing. So, I mean, sure, I've been doing this now for 25 years. So I've seen a couple of these markets where, thinking back to 2009, 2010, that was rough, right? So hopefully we're not going into that territory again. But it's, it's challenging and you figure things out. And that's part of the fun to it.
Perfect. And how soon after you started seeing success in your brokerage business did you decide to go out and actually start buying your own properties?
Very early on in my career, and I wouldn't say buying properties on my own, that being said, I found, watching my clients who, as the broker, you're kind of getting a bird's eye view of all the transactions out there. And I saw a lot of clients who were just doing tremendously well. And, timing has a lot to do with it. But, you see all these opportunities and you say, look, how can I not get in the game, right? And so I remember very early on in my career, a developer sponsor friend of mine, Matt Blesso, who I'd met through NYU, he called me up. He said, James, I've got this great mixed-use property down in the Village, tied it up off market. I think I got a really good buy on it. What do you say? Can you flip the contract for me? So I said, sure, let me give it a run. So I start calling on this property, and within a couple days, I had over $500,000 on the table just for him to sell the contract. Awesome. So I knew he got a great deal. Yeah. And he said, James, I know you did a lot of work on this, but I love this project. I'm going to do it myself. And I said, well, Matt, are you taking on investors for this? And I never invested in anything or knew what to ask. He says, well, it turns out I am. And so I ended up being his first investor ever. Wow. Went on to invest in over a dozen different properties with him. That deal still stands as the best investment of all time. Awesome. Not in total gross dollars, but if you look at multiples of return, it was the gift that kept giving. I think we bought the property when all shook out at $1.8 million, $1.9 million. He ended up selling off the condos upstairs for $5-6 million. Obviously, there was cost to convert it, but we kept the retail. So now we're into the retail for nothing. We sell the retail as a separate condo 5-10 years later for over $4 million. Wow. Okay, so double what we paid for the whole building originally. But then the gift just kept giving. Then we 1031 exchanged that into a building in Brooklyn. We sold the air rights off of that building. We still have the building. I mean, it just...
That's awesome.
Yeah, so... It's definitely, I think when you're a broker, you see a lot of great opportunities. I think the important thing is to do it in the right way. So I'm very careful when I invest. I don't invest in properties that I'm selling. It's a clear conflict. Even if I came in as a minority partner afterwards, if a client said, hey, James, you told me you just sold the property for the highest price, and now I found out you bought it on the back end, that doesn't make me feel too great. So when I buy and I invest now, I want to make sure that another broker's handling the property. That way it's clean.
Okay, got it. And how has your investing strategy changed from the beginning to this point today?
You know, what I've realized is that as much as it is about the deal itself, it's more about the sponsor. And I don't talk a lot about it. I didn't even talk about it in the book that I know we're going to get to, but I do some venture capital investing as well. And for me, it's all about the sponsor. And you know, I want to see, do they have a track record? Do they have the right team? And so I'm very focused on that. And that's why, you know, once I saw what Matt Blesso could do, it was easy to invest a dozen more times with him, right? You've got that track record. And that's not to say that we didn't, that they were all home runs. I mean, if you do this long enough, you're going to get, you're going to have a couple that don't work out. But yeah, it's really important to work with great sponsors.
Got it. So would you say that starting out, you kind of looked at the asset more, but now you kind of look at who's actually investing and operating into the asset?
That's the first thing I look at. Yeah.
Awesome. Great. And what property types of submarkets did you see the most success in, and which ones did you struggle with the most?
You're talking about now as a broker or as an investor? Or both?
As both, yeah.
Okay. So as a broker, it really... back in my Massey and Ackle days, it was really where my focus was, which was Chelsea, then the Village downtown, and a lot of focus on kind of multifamily mixed use. That's always been the bread and butter, and there's a ton of it here. So even, you know, our team now will sell 50 properties a year, and half of that's going to be multifamily mixed use. But we do a fair amount of straight retail as well. I actually am very bullish about retail. I love the rebound that we've seen on it since COVID. Land assemblage development fascinates me. Office, obviously, a lot going on there. So we'll try to figure out how to convert those to residential now in many cases. But yeah, no, I like the fact that we do all asset classes. The way we have our team set up today is not just by territory, it's by asset class. So I've got multifamily specialists, retail, land, and office. As an investor, this might seem strange, but I almost find myself investing because I don't want any conflicts in my market. I end up doing a lot more investing outside of New York City. Okay. So right now, the last couple of deals I've looked at, I went in on an industrial portfolio up in Connecticut. I'm looking at an RV park right now, which sounds pretty interesting. Yeah. So yeah, I'm opportunistic for sure.
Great. Awesome. And can you walk us through your experience as a professor of almost 10 years at NYU Shack? What are the main takeaways, and how did this experience kind of shape your career from this point on?
You know, I love getting in the classroom, and I think when you're out there speaking to a classroom, sure, on one hand, hopefully I can help students, give them some good advice, help them think about their future trajectory. I also get a ton of information, and I think you find out what other people are up to. A lot of those connections that I made early on in the classroom have become clients, friends today. So it's an incredible network, and it's in addition to guest lecturing at NYU, I've spoken at Columbia, Fordham. I do a lot of work with Wharton. I'm actually going up to Cornell later this week.
Oh, awesome!
Yeah, it's a lot of fun.
Great. Awesome. And so, James, you're clearly a veteran in the space, and certainly someone that people should listen to. Can you tell us a little bit about your book? What is it about, and why did you decide to write it?
Yes. So the name of the book is The Insider's Edge to Real Estate Investing, and thrilled that it just was released last week. So this is a long time 100%. In the making. And, you know, right in the very kind of dark days of COVID, so sitting at home, you know, late March, April, had no idea, you know, are we going to be in this for weeks, months, years, who knows? And I'm a big fan of coaching. And my coach, Blaine Strickland at the time, said, James, do you want to look back at this time and just say, hey, you were able to hang in there and wait it out? Or do you want to actually take advantage and do something where you might never have time like this again? And so I didn't start writing the book, but I did start a podcast. And at the time, I didn't even know what a podcast was.
Right.
I hadn't listened to any, but I said, okay, wait, I can actually interview somebody. No one knows what's going on out there, but let's talk about your story, right? And so when I interview, I'm really interested in, tell me about how you built your business.
Right.
Tell me, these timeless principles that are evergreen. So I'm about, 50 or so podcast episodes in. I can't even remember who gave me the idea in the book, but I said, all right, I've got some really great episodes here. I want to write a book on this. So I start working with a writing partner, talking about some of these legendary investors' stories, and I'm about halfway, 3/4 done, and I'm thinking, all right, I hope that this is really good stuff. This is very inspirational, but it doesn't actually tell you how to do it, right? So I said, I got to write the how-to book. And what's interesting is that there's a lot of books out there, whether it's how to, flip homes, Rich Dad, Poor Dad. There's a lot of that stuff out there. There's also a lot of textbooks. But it's interesting. Whenever I ask people, what is the book that taught you how to invest in real estate? Or if I go into the classroom and I say, what's the book that you give your students? And they say, oh, well, I've got some articles. I pull out, a couple chapters here and there. But there's no book that really tells you from start to finish, how do you, first of all, what type of asset do you want to invest in? What type of team do you put together? How do you go find that? How do you work with brokers? How do you raise capital? How do you close the deal? How do you reposition it, right? And so that was the impetus for the Insider's Edge to Real Estate Investing. And the whole premise and why I love real estate investing is that it's an insider's game, right? So we can go buy stocks right now and you can find out exactly where something's trading at any minute of the day. And everybody has the same information. If not, as the retail customer, I probably have the worst information out there, right? So I might as well just be throwing darts, right? And even when I try to make I thought after COVID that I'd make a great bet on Carvana because, I bought a car for my son, or we bought the car. I had such a great experience. I said, this is the future of the car business. I'm going in on Carvana. And I don't know if you've been following that stock, but it's just dropped like a rock. So anytime I give stock advice, just do the exact opposite of what I said. But the point being is, if there's all that information out there for stocks, real estate is a very inefficient marketplace, right? You can see two buildings that sold on the same block and one sold for double the other. And you say, well, how can that be, right? Well, okay, maybe one building's renovated, maybe one has more rents, but it could also be that the building that sold for more money worked with a professional broker who actually exposed it to the marketplace,
got the right buyers,
and got the highest price, whereas the other was a distressed sale and they sold it at auction, right? So that's really interesting to me, that you can find these great opportunities if you know what to look for and the right questions to ask, right? And then you also you're the master of your own destiny, and that you can take that asset and you can add value as opposed to just sitting there and waiting and hoping that someone else does, right by a company, for example.
100%. So you kind of boil down all these inefficiencies and you kind of condense hundreds of years of wisdom in the commercial real estate industry all into one book.
I hope so. I don't know if I've got hundreds of years in there, but definitely my last 25 years. But if you add up all my clients and all that knowledge, yes, there's a lot that went into that for sure.
Perfect. Awesome. And as far as your podcast, what have you learned about people and what have you learned about yourself from doing 50 to 100 interviews on your podcast, The Insider's Edge to Real Estate Investing?
So what I found, and this really is part of the foundation of this book, is this is a business about the people, right? And yes, there's physical assets and there's real estate, but success in this business is having the right team and knowing the right people. The first interview that I ever gave for my podcast was with Bruce Ratner, prolific developer. I mean, he's built over 50 projects here in New York. He's a part owner of the Nets. And I kept asking, Bruce, what's the key to success? Oh, I had this great team, all the people. I'd always get the right person for the job, and this is how I'd hire these people. Interestingly, In the same way, I asked Rick Clark the same questions, former CEO of Brookfield, the largest property owner in the world. Yeah. Rick, when you started with Brookfield, they were a Canadian company. You started the New York office with like 3 people. Now you were the largest property owner in the world. How'd you do it?
Yeah.
And this was, I was thinking Rick's moment to say, well, hey, I really took charge and I took the lead. No, he said, we had great people. And when I went back and I counted, I listened to that episode, I had it transcribed with Bruce Ratner and counted the number of times that he said people are team in a 1-hour interview over 50 times.
Wow.
Right? I don't even think he realized he was doing it at the time, but it just shows you it's about the people.
Yeah. 100%. And who was your most exciting guest on your podcast?
That's that's like picking a favorite child. Yeah. I don't know. They're all so interesting to me because now, and you've been doing this a while now, that you just start going down these rabbit holes, and you never know what you're going to find out. So I mean, there's a lot of favorites out there. It's interesting though. The one thing I will say is sometimes when I have a newer emerging sponsor and they come on, they say, "Oh, James, You've had Scott Reckler on, you've had Francis Greenberger, Don Peebles. Like, what am I going to teach anybody? And I said, well, look, you've done this all you started this company 5 years ago, okay? And now you've got, 800, 1,000 units. I think listeners are going to be really interested to hear, how did you do it, right? And they might actually identify with you more.
Yeah.
So I love it also. I'm sure you learn a ton by doing these, that you find out these great tips as well. So it's a lot of fun.
100%. And what do you think makes a good podcast host?
Well, I think preparation and clearly, I mean, you've done your research. I wish I do a lot more research for my podcast. A lot of the times I know my guests before, so I can kind of rely on that. But I think you want it to be conversational, and I think it's okay to go a little off tangent. Right. And, for example, last week I interviewed a merchant developer who goes and builds properties for CVS and triple net properties. And it's not a business that I'm even in. Right. And I hope the audience doesn't mind, but we got into like a 20, 30-minute conversation on environmental issues. And in New York, sure, we've got, you do your phase 1, you do this, you do that. But when you're developing, certainly in some areas outside of New York, I mean, it's a whole separate business and all the liabilities and consideration. And so I just, it was really interesting for me to go into the weeds and figure that out.
So you kind of let curiosity take the reins.
That's right.
And guide you into a certain direction. And how do you come up with the questions for your show? Is there a process that you go through before every episode?
Embarrassingly, no. I really just kind of let it fly. Awesome. I mean, I kind of know where I want to start. And now that I've done enough of these, I want to hear the guest's story, because I really think those early years are very telling. Right. When you kind of say, hey, what was your first job? Tell me about your first deal. Right. I always want to know about the first deal. How did you raise the money? To hear, even, again, I keep talking about that episode with Bruce Ratner, to hear him talk about scrambling to raise his first $25,000. I said, that's pretty interesting. People can relate to that. So, and then after that, I want to know, certainly what advice would they give to the aspiring investor? How do you start out? I think that's always interesting. And then now that I've got this book and really the message, having this inside edge to real estate investing, I always want to know, what is your edge? What is your advantage? And it's also interesting to hear how people answer that.
100%. And how did developing your personal brand help you in your business of brokerage and your business of investment?
That's a great question. And I would give a lot of credit to my friend Ryan Serhant. And by the way, if you haven't had him on your show, you should absolutely have him. I was always fascinated in what residential brokers have done, because they've figured this out way much longer ago than commercial brokers. And a lot of commercial brokers, they like to keep things closer to the vest, right? They almost, and Bob and Paul even talk about when they started in the business and they put a for sale sign and they sent it out there, and the owner said, "Hey, why are you doing that? You don't need to tell everybody. Right. Just bring it to me. I'll buy it for you." And so, and it's amazing that a lot of the stuff, a lot of the properties in commercial, they still sell off market. They sell quietly. You never even know about it, right? Whereas residential, sure, everybody puts it on the multiple listing service. So I was very interested to hear how did Ryan do it, right? Because he is the master of building that brand. And so when he came out with that course, Sell It Like Sirhan, I think I was one of the first people to show up for the pro membership. And he called me, he said, James, you know that we've got a residential business here. And, I said, exactly. I understand. I want to learn how you do this.
Yeah. And
it's been a great collaboration. Ryan actually wrote the foreword to my book.
Awesome.
And he gave me a lot of great advice. So jamesnelson.com, right?
Perfect.
I've got the site there. And there's a lot of content. So I think the important thing, though, when you're building your personal brand, it's not about, hey, I'm number one and I'm the best, right? No one, that's not what people want to hear. It's, do you have valuable content to share? How can, and that's why when you look at the white papers that I write every month, I put myself in my client's shoes and I say, what's keeping them up at night? What do they want to know about?
Pain points.
And I write that article for them. We are in the problem solving business. So that's what's really important. I mean, sure, it's under your name, so people know where to find you, but you're there to
provide value. So you think you should build your brand around providing value to people instead of extracting value? That's really the focus.
Sure. Yeah, and I think it starts with being an expert, right?
Right.
So you need to, whatever your space is, whatever your specialty is, you need to know that market so you can speak intelligently about it and you have something valuable to say.
100%. And what do you think is an underutilized tool that most brokers and investors aren't using that may be holding them back in their career?
Well, I think the whole podcast medium is now out of the bag. But no, I mean, for a while it was interesting that I was doing this, and it didn't seem like anybody else was. So,
exactly.
It's a great format. I'm now, and I know Clubhouse kind of came and went. I don't know if people are still doing that, but I am watching now to see what's happening on Twitter with Twitter Spaces. I think I get much better traction on, LinkedIn by far and
100%.
beyond is the most powerful social media tool for us in getting the word out there. Instagram and second. But I mean, Twitter, I know investors are out there. I think it's just, there's only so many hours in the day. And I really feel like it's a platform that you have to work, right?
Yeah.
And you really have to engage. And I can barely keep up with my emails during the day.
Yeah, 100%.
But that's something interesting to watch.
Definitely. And I want to discuss some concepts in your book to kind of give the audience a little preview of what they can expect. You mentioned this concept that finding your niche in the real estate investing begins with understanding what property type best suits you, along with the right management intensity and risk levels. Can you walk us through how having the right information can kind of give you the advantage?
Right. So the first piece is, yes, to really understand, where is your expertise and where do you have the time to devote to it? Because sure, it sounds like everybody wants to be a developer. I know I teach a class with Jeff Ravitz, who's a friend of mine at NYU, and he starts out the class, saying, "Who wants to be a developer?" And everybody raises their hand. Everybody wants to be a developer. Everyone wants to make tons of money. He says, "All right, well, let's talk about what happens at a closing." Okay, hey, who's a broker here? Oh, all those brokers. Do you get a check at closing? Oh yeah, you get a check. You get paid, don't you? Okay, what about attorneys? Oh yeah, you get. When do you get paid?
Right.
Oh, at closing. Yeah. Developer, what are you doing? Okay, you're signing checks. You're signing personal guarantees. You're taking on all this liability.
Right.
Everybody says, all right, how many of you still want to be a developer? And maybe half of them still raise their hand. But the point is, you need to understand how much time that you have to devote to this, right? And there's nothing wrong. I do the majority of my investing as a limited partner, right? I don't have time to be out there actively managing every single day. I just don't, right? And I think I can do a better job investing by being a limited partner or a co-GP where I can bring on a great partner to invest with. So I think it's really important for you to understand and embrace, where is the best role for you to play when investing.
Definitely, 100%. And I want to ask some questions about specific asset classes and property types. So for retail owners and investors, you also mentioned this in your book, how important is it to have a few retail tenants at hand that readily want to expand?
Yeah, I love this business plan. Jeff Sutton, and I don't know if I could ever get him on my podcast. Maybe you'll have more luck getting him on yours, but brilliant. I mean, one of the absolute, retail gurus, and he made his fortune early on in the days he I think he opened up 100 Payless stores. Maybe it wasn't the sexiest thing at the time, and then he moved on to Walgreens. But he would go and create situations. He would have Payless. I remember hearing him speak, and they'd point out that store. I want that property. And he'd go and he'd buy out the tenant, he'd buy the building. He'd have the Payless lease in hand, close on the deal. And the day he closed on it was worth double what he paid for it. So I think today, clearly, vacant retail and in some areas, distress, buy at a discount, very challenging to finance vacant retail. You have that tenant in hand, it'll make much easier. Big difference for sure.
And as far as office, what should people investing in office in this day and age consider before going into contract and acquiring an office asset?
Yeah, office, besides the obvious with all the questions as far as return to office, hybrid.
Class B, yeah.
The one thing to know about office, it is very capital intensive, right? So for someone starting off in the business, I do not recommend office because first of all, the scale of it and the amount of money that you need to bring to the table, it's not, as you know, just buying the building. It's actually then trying to tenant the building, which is incredibly expensive. Yeah. You might think, oh, I got a great deal. I bought this office building for $300-400 a foot. You might be in for double that just to improve it, TI, brokerage commissions, downtime. So you really need to make sure that if you're doing something like that, you've got deep pockets and you're able to take 100%. The long view on that.
Yep, 100%. And can you walk us through a deal that you were very confident in going in that didn't go as planned? What would you have done differently?
So on the investment side, I will tell you one of the investments where we were completely wiped out was a property in Fire Island. This was a retail, hospitality, F&B, and this was a sponsor who I had invested with multiple times before. So by now I said, look, this sounds great. And we get the package, and on tax returns, it's an 8 or 9% return. And I said to myself, look, this is an 8 or 9% return. This is what they're reporting to the IRS. This is an F&B business. I mean, who knows how much cash is flowing here, and it hasn't been professionally managed. This thing is going to be unbelievable, and it was a complete unmitigated disaster. Wow. Anything that could have gone wrong went wrong. Starting with Sandy, that wiped the whole place out. Then there was a fire, and yes, we finally got the insurance, and we got something else built there. But it was a seasonal business, and it was a business. It wasn't a real estate deal. I went in on another bar afterwards. I lost all my money on that too. So I'll invest in real estate. I'm not investing in F&B, and I'm sure there's plenty of people make tons of money. It's cool to walk into the club and say, hey, I'm a part owner, but no thank you.
Right. So this business is more complicated than it looks like from the outside.
Very complicated, especially a seasonal business, because at least if it's a year-round business, you can employ year-round staff and you can, make adjustments on the off-season. Here, you've got 4 months to make all your money for the entire year. And if you get, some of these, obviously Sandy, that wiped out the entire season and the next year, it's
difficult to
very
predict.
risky. Yeah.
And what value-add strategies have you seen that are kind of unconventional and out of the box that have worked?
Unconventional value-add strategies. Well, I don't know if it's entirely unconventional, but I love when there's an ability to add air rights, and maybe there's some development potential that might not be initially visible. Yeah, and the famous story is with Michael Stern's purchase of Walker Tower. Yeah. He figured out some kind of mechanical deductions where he bought this old Con Ed station for $25 million. Yeah. The whole sellout was rumored to be $500 million, and yes, he had to build the building, but he clearly was able to figure out what to do with that property that no one else could. I also remember Margaret Stryker. She's great too. You should have her on the show. She's probably bought, I don't know, over a dozen or so properties for me over the years. And I remember, and she always is a little close to the vest. I never know, Margaret, she knows that if she doesn't want to let on too much, because she knows if I tell the broker, then the broker's going to tell everybody else what to do. So she buys this mixed use property down in the West Village, and it was kind of a market price for what it was. And I was thinking, Margaret, why are you buying this? She said, just wait, you'll see. So she closes on this, and she said, look, you just sold me. I just have the rights to build this carriage house in the back. She found some archaic zoning rule where she had the ability to replicate a carriage house that didn't even exist in the back of the property. So I think that's really fun when you can figure out something to do on a property that no one else knows about.
100%. So your value as an investor and as a operator is kind of just to find the information that nobody else can find.
Yes.
And capitalize that information.
Yes.
And how do you make money in a down market?
Well, you always want to buy right. So you don't want to over lever yourself. And it's interesting, having done this 25 years, I look at the deals that I sold in 06, 07, peak of the market. And those who over levered, and it was easy back then because the banks were just throwing money at people. Right. Most of them lost their properties, right? But those who were very, conservatively leveraged, they were able to hold out, and over time rents went up. So, look, I think in down markets, and this is, I'm not sure when you're going to be airing this, but I mean, we've just had this run up in interest rates, right? And so as a result, a lot of the buyers are on the sidelines. I think Lev talked about this too when he was on your show. And as a result, there's less competition in the market, right? So I think this is a great opportunity because there's still owners. And one of the things I talk about in my book, which is the most important thing to look when you are buying a property, is seller's motivation, right? So whether it's an estate sale, whether it's a partnership dispute, whether it's distress, you have an owner who has to sell, and there's not a lot of competition. Yes, there are great opportunities out there. 100%.
And how important are politics in the real estate game?
Incredibly important. And so, yes, a lot of what we do here is dependent on whether it's zoning, whether it's tax abatements, and right now you don't see any rental development because the 421A program expired, right? So I think there is a lot of talk, though, about, and look, we could have a whole nother hour discussing the pros and cons of rent regulation and how I believe that it actually doesn't make housing more affordable. In fact, I wrote a white paper on it. But I think the more important part is there were so many investors who just herd mentality as soon as HSTPA happened in 2019. They all said, you know what, forget New York. I'm going to go buy in the Southeast, right?
Away.
And I get it. You can go and do anything you want. Like I think it's Houston that has no zoning, right? You could just build whatever you want. Okay, well, that's great when you're a developer, but then so can everybody else, right? So in a strange way, the barriers of entry with how difficult it is to get things done in New York makes properties more valuable. And the fact that no one can build new product right now, again, makes housing that much more valuable. However, with rent regulation, sure, if you can't raise the rents, then the return has to justify that. And that's why if we're selling we have a building in Queens right now that's fully rent regulated, we're selling it at over a 6% return, right? So you can still borrow money and have positive leverage. A lot of those investors who are buying down in the Southeast at, 3.5 caps, they might be having some challenges now that it's time to refinance.
And how do you navigate this world if things like this are out of your control completely? How do you navigate the politics?
Yeah, I mean, look, I try to do the best I can to stay on the inside and to try to find out what's going on. The Real Estate Board of New York does an incredible job. If it's rent regulation, it's CHIP, but really hearing everything that's going on. And I think also engaging with politicians. So I was in an event last week with the speaker of the city council, and look, you want to hear what they have to say. You want to hear what their priorities 100%. Are, and I think there's a lot of commentary out there of it's the pro-business versus the politicians. Everybody wants the same thing, right? We all want housing, right? It's just a question of how do we go about doing this, and so if we can kind of really try to cooperate, partner, right? I think there's a lot more that can be done.
Yeah, definitely. And what has been the most difficult point in your career, and how did that kind of shape you as an individual from that point on?
Well, the most difficult was certainly, if you think about 2009, where sales volume dropped 90%, 90 from 2007, as did my income. That was a pretty scary time because we had no idea what was going to happen. How long were we going to be in this? And I think what we did, and Bob and Paul were certainly all a part of it. We just kept showing up to the office. Maybe we didn't have anything better to do, but we said, look, we're going to keep just showing up. We want to be that true advisor. We want to be reaching out to our clients, telling them what was going on. You never know when things are going to turn. And then next thing you know it, the bank starts selling loans. I'd never even sold a loan before. And next thing you know it, by 2010, we're representing every single major bank selling all these loans because we were putting in the work. So I think that's really the key. When things get challenging, sometimes the immediate gut reaction is, look, I'm going to just run in the different direction, or I'm going to go do something else, or I'm going to just take a break. And I think it's really tough to jump out.
Think objectively.
When you stay in it and almost double down, once things turn, and they always do, you find out that you're much better positioned for the rebound.
So in tough times, it's important to think objectively and take your emotions out of the equation completely and think about what everyone else is doing to make your decision.
That's a great way to put it. Yes.
Okay. And if you had to go back and do it all over again, start your career again from scratch, how would you go about becoming a legend in the space?
Well, I don't know if I've reached legendary status yet, but well, I think that early on, and yes, I did do some investing, but I think I would have done a lot more. And knowing that it's tough to do both. I mean, the brokerage is a full-time job, right? And we did, the big opportunity for us to invest was to do, we raised 2 funds, River Oak, New York City 1 and 2. So we said, this is the best way we can invest. We can put out JV equity for value add deals in New York. We can invest alongside our clients. And we did 2 of those funds. Timing is always, a big part of whether or not you have success for those. So some of those funds are still playing out, but I wish we had started in that arena earlier.
Got it. Understood. And what do you look for in a new hire?
So I think it's really, and I'll take this from Paul's playbook, and I think it's probably the reason why at least I got a call in for an interview, although I like to remind them there was only 2 people who applied for the job, right? But I was a swimmer. I was the captain of the swim team at Colgate, and athletes, whether you're an athlete or whether it's debate team or whatever it is, if you can show leadership skills and you can show that that you're willing to overcome, it's not just hard work, but overcome challenges. And I especially remember Barbara Corcoran spoke to our company very early on in the career. We asked, Barbara, you meet with hundreds, thousands of brokers. How do you know? What are the attributes that make someone successful? She said, it's how you handle failure. So, that knowing that if you fall upon hard times, that you're going to have a chance to overcome that and grow from it.
Right.
So that's why, and I got to note, I did take a look at your bio on LinkedIn, and before your very impressive career, and
I said most of my businesses have failed.
You said most of your businesses have failed.
Right.
I didn't look at that as a negative, right? Because if you're not out there doing it, and I would imagine even if those businesses aren't there today, I'm sure you learned a tremendous amount from them.
Yeah, 100%. And what's your mindset when something happens to you that you didn't expect? How do you approach the situation?
I guess if I could improve in the arena, I have a tendency to make very quick decisions, and there's pros and cons to that, right? On one hand, I think that I can move very quickly. Right. I can get a lot of things accomplished. I'm a big believer in progress over perfection, right? If I sat around and thought about all the ways that I could make this book as successful as possible, it would have never gotten done. Yeah. I just said, I'm doing it. Let's figure it out, right? And so when there's a problem or something that pops up, I'm usually the first one to say, I've got it. I've got the solution, right? And right or wrong, so I think we can all continue to grow. And luckily, I've got great partners, and you got a chance to speak to Erica Dean. And for those of you listening, you should go back and listen to that 100%. Episode, because he's such a critical thinker, and he really balances me out. Because when we first started partnering together 5 years ago, because I just come up with all these ideas. Eric, let's do this, let's do that. And he was writing them all down and trying to, and it's impossible. You can't do it all. And so luckily, he really helps kind of streamline and figure out where we should focus our attention and be successful.
Definitely. And do you think in a partnership, it's important to have opposites, kind of somebody who's very neurotic, has a lot of ideas, and someone who's very level-headed and smart and kind of can, take a step back?
Yeah, I think that having a team with different skill sets,
different personalities,
is super important.
Yeah.
Absolutely.
100%. And how do you go about setting goals for yourself and for your team?
So every year we end up going through the financial review. We make our we track everything. Okay. I mean, we are insane as far as what our KPIs are, right? And so yes, to the penny, I know where we want to be. That being said, we've made I don't want to say a big shift, but the emphasis now is not so much on goals as opposed habits. And maybe we're just jumping on the Atomic Habits bandwagon right now. But, the thing about goals are you can say, okay, I want to make this much money. I want to close this many deals, whatever it is. You can put that, you can put that on a note card. You can put it in your desk. You can look at it, at the end of the year, did you make it or not? But what's more important, of course, are what are the actionable steps that you're going to put in place every day
100%.
To make that happen? Yeah. So very focused now on the habits of what I want to be doing on a daily basis to achieve the long-term goals.
100%. And James, I watched an interview you did recently where you said that if you want to be the first phone call and really have that reputation as a buyer of being a closer, you have to be ready to close on a deal that you place an offer on. How do you balance keeping your reputation strong as a closer and keeping your investors happy? What if closing on a deal you initially placed an offer on doesn't make sense anymore for your investors or for you?
Wow, that's a great question. So I think, yes, if you make an offer, I think it's important to stand by it. I think, and I write about it in my book, reputation is everything.
Yeah.
So look, that's not to say that things don't come up in a deal. If there's new information that happens or you're negotiating a deal, I mean, we've seen dozens and hundreds, thousands of transactions get renegotiated over the last 6 months because you start talking about a deal and rates go up and you just can't make the numbers work anymore, right? But that being said, if you get the reputation where anytime things are going to change, people aren't going to want to do business with you. Just like, it can go the other way as well. It can, the market can start to run. Yeah. It's interesting. I saw Jeff Garral the other day, and I interviewed him, and he talked about the value of a handshake. And he said, back in the day, we shook hands, and that was it. It didn't matter if I got a higher offer. I'm sticking with that deal. And you don't see that as much today, but I think it is important that you want to stand by your word. Very important.
Awesome. 100%. And I watched another interview you did where you said that when buying an asset, the key is to build the right team of specialists. How do you go about finding and incentivizing these specialists to work with you?
Right. Crucial to have the right team in place. And I talk about that in the book as well. And it's specialist. And you said, that term, because it's not just an attorney who does your trust and wills. I mean, if you want to go buy a multifamily in New York, a rent-regulated asset, you better hope that your attorney has closed on multiple rent-regulated apartment buildings before, and they have the L&T and they know what to ask, right? So very important that you have that attorney. Obviously, the broker or brokers who are out there looking out for you, bringing you opportunities. Rental brokers, leasing agents who can tell you the reality, not just what looks good in a pro forma, the managing agent that can tell you the realities of operating a business building. So very essential to have the right people. And as far as incentivizing them, so most of these people, certainly brokers are commission only. Attorneys, most of them will give you some preliminary hours as a courtesy, but obviously once there's, whether the deal trades or not, there's going to be legal fees. So, but I think as far as incentivizing, I think that most specialists, people want to work with people they like, right? So if you're fun to do business with and you're helpful and you're always thinking of ideas and it's mutual, it's not just, hey, what can I take from you? I even talk in my book about building stronger relationships with brokers. And it's a two-way street. Right. So many investors out there just, hey, what can I get? Hey, what do you got for me? Yeah. Whereas if you kind of take that time to say, look, I saw this deal off market. It's not for me, but maybe you want to follow up on it and go list it. Like the broker's going to say, thank you.
Yeah.
You know, that's great. And they're going to remember you, right? And taking that extra step.
Definitely. So being honest upfront and taking kind of the long-term vision of building a relationship instead of closing a deal is the way to go about it.
That's right. It's not just you don't want to just have a transactional relationship with someone.
100%. And in another interview you did, you mentioned that for someone starting out as a blank slate in the business, what you can bring to the table to a trusted partner is a great opportunity. How can someone young in this industry with no money give themselves an edge by doing extensive research and due diligence?
So that's, you really did your homework. Yes. So it all starts with the deal, right? And so someone who's looking to get into the business who doesn't have the money, what do you bring to the table? You bring the opportunity, right? And so yes, it is research, right? But it's also, you have to be able to find something that no one else knows about. So I'll tell you a very quick story. I don't know how we're doing on time, but I went to ICSC, and one of the big retail buyers out there, they're having a promotion where if you sell them a deal, they'll buy you a Corvette, right? As a commission. My 18-year-old son, all he talks about is cars. So, and I want this, I want that. I said, hey, Luke, great news. All you have to do is find a property over $20 million. This is the criteria. It's got to be this tenant. It's got to be this cap rate, and they're going to buy you a Corvette. So, of course, I said, I'll let you do the research. I'll do the brokerage, and then I'll let you drive the car. And then he debated, no, I want to drive the car. But so he starts and he goes, and he actually did a really good job researching, and he found, a bunch of stuff. Awesome. And we sent him over, and they said, well, thanks, but we already saw it. And he says, well, how do you know they already saw it? I said, well, first of all, you're going to take that investor's word for it because they want to encourage you to bring more things. If they just tell you everything you show them, they've already seen, then you're going to stop. So, but the thing he was doing was he was going online and searching where everybody else can find that. So the real valuable opportunities are the ones that no one else knows about. So for example, think about the building that you live in right now. Maybe, it's owned by, mom and pop. You know that the rents are low. You catch wind that they want to sell, and you bring this opportunity, and it's not on the market. That's the kind of thing we're talking about.
So finding that information that not a lot of people have access to is really the key to setting yourself apart as a young person.
Yes.
Okay. And what idea do you believe, whether grounded in data or intuition, that many people you respect disagree with you on?
What do most people disagree with me on? Well, I don't know if it's complete disagreement, but I think sometimes skepticism or questioning. I mean, there is what we're doing right now, this podcast, and we're putting this information out into the ether, for free, right? So, as far as we're doing this to be helpful, to try to be, put great content information out there. We're probably not doing this to try to get, if someone listens to this episode and they call me right after and says, James, I have a building for sale. That of course would be phenomenal, but that typically does not happen. So sometimes the question would be, James, have you lost your mind? Why are you doing all this? It's a lot of work, as you know, to do a podcast. There's a lot of time and effort, right? Job. You could take this time and you could just be calling up and down the block, trying to find deals to, finance or investments to be made. So, look, it's hard to say, right? I think you have to do it all. But I think some people are skeptical about this new way of doing business and putting information out there. 100%.
And would you say that in moments like this, your gut prevails, even though your brain is telling you not to do it, your gut kind of tells you to do it anyways?
I just enjoy it. Look, I mean, sometimes you can't do everything to say there's going to be a direct return. Exactly. Right? If everything we did was, I can tell you, I did not write this book to get rich. Exactly. We'll see if it sells copies, but if it helps a lot of people, 100%. Great.
Yeah, definitely. And James, you've been a broker, investor, professor, podcast host, author. What's next for you? What's going to be your focus now?
I'm having so much fun doing what I'm doing. I think the question is always, how do you do it all? And I do. The team is the group we have, and we have some superstars on the team. And look, I just love being a part of it, and to what extent that I can keep getting involved, bringing in great opportunities. Great. I'm starting to explore other markets as well, helping out our Miami office on a large-scale waterfront development. I was out in LA a couple of weeks ago looking at an opportunity. I don't want to take my eye too much off the ball in New York, but there's a lot of great real estate out there. And again, it's interesting to me to be able to learn other markets. And then investing, I want to really, I've got to practice what I preach. So I want to definitely really spend a lot more time building out my own personal portfolio.
100%. And what does retirement look like for you?
Well, it's probably, so my sons right now are 18, 15, and 12. So we've got a little more time where everyone's, we at least have the younger two still at home. But my oldest son's going to be going out to USC. He's going to be playing water polo out there, which is super exciting. So could definitely see ourselves spending a lot more time on the West Coast. We like going up to the Cape in the summers, love Florida. So I like to keep moving around.
Great. And what drives you nowadays? Is it money, personal achievement, family, philanthropy? And when would you kind of say you've succeeded and you've made it and you're good to go?
Wow. So I'd first say it's not the money, and not because not that I don't like the success and closing opportunities, but if you ask me, James, what was your 1099 last year? I couldn't even tell you. Yeah. I mean, now I could tell you what our team revenue top line was to the penny. I am so focused on what the team is doing, because I know if the team does well, then James Nelson will do well personally. Right. So it's not about the money. I think it's taking on new things, like doing a podcast, having never, even listened to one at the time, to produce that. This book, this is a whole new foray. It's fun. I think it's just continue to challenge myself and do new things.
Awesome. Great. And I have my final question to wrap it up. What advice would you give your 22-year-old self about life, business, and relationships?
The advice that I would give myself, which I was very fortunate to just be in the right place at the right time, is have incredible mentors. I mean, how lucky I was it's not like I applied to 20 real estate shops, right? I mean, I was literally senior spring up at the Career Service Center. All my buddies had investment banking jobs, and I had to figure something out. And I saw that application for Massey Knackle. And, if you believe in fate and that things happen for a reason, that was certainly the case, because to start my career with Bob and Paul and to go on and be their partners and work alongside them for 20 years right out of college, that's pretty rare. So I'm very grateful
100%
for them.
That's awesome. James, thank you again for doing this. I really appreciate it.
Thank you.
There's so much value.
It's a lot of fun.
There's so much value to be gained for young professionals, and they can apply this to their career moving forward. And to the audience, if you're serious about taking your commercial real estate career to the next level, there's no better place to start than James' newly released book, The Insider's Edge to Real Estate Investing: Game-Changing Strategies to Outperform the Market. I'll put all the links to the book in the description below for you guys to check it out. And for those who already have the book, please go ahead and leave a 5-star review on Amazon to help spread the word. Whether you're new to the business or a seasoned vet, I promise you this book will give you actionable steps to gain the insider's edge to outperform the market. Thanks again.
Wow. Thank you, John. That's awesome. That's great.